Did you know that in the state of Minnesota, you can buy a home with as little as $1,000 cash out of pocket? When you think of it, that's a lot less than how much money you need for a rental deposit. And that's through the use of down payment assistance, and in particular, the Minnesota Housing Finance Agency Deferred Payment Loan. The state of Minnesota wants you to buy a home, and they will loan you $14,000 at 0% interest with 0 monthly payments. So that comes from MHFA, the Minnesota Housing Finance Agency. Now, of course, there's qualifications, and we're going to talk about that, how it works, how to qualify, where to get it, and all of that on this video for the Minnesota Housing Finance Agency Deferred Payment Loan. Hey, I'm Peter Lindquist with the Lindquist team. If you like this video, please just take a second and give it a thumbs up. And if you're interested in home buying, please consider subscribing to the channel. It definitely helps us out a lot. Okay, let's start out with how does it work, the deferred payment loan from MHFA. So the first thing to know is that I'm calling it a loan. This is money that is lent to you from the state of Minnesota. And even though it's 0% interest and 0 monthly payments, it's a loan, which means that it's not a grant. You can use it for down payment and closing costs, which a lot of people don't understand. They think of it as just down payment, but it can be used for both. And there's no monthly payments due on it, which is crazy, right? It doesn't add anything to it. One big thing for you to understand is you need at least $1,000. So I've helped many home buyers buy a home with as little as $1,000. And then, they sell it several years later. And if they've got appreciation, they walk away with equity. But it's very satisfying when a buyer buys a home and all they've used is $1,000 of their own money. Now, let's take a look at an example of how that might work. So let's say that your down payment and closing costs total $20,000. And you don't have 20,000, you've got 1,000. So, this, loan will cover up to $14,000 of that through, the Minnesota Housing Finance Agency Deferred Payment Loan Down Payment Assistance. Okay. 14,000 of the 20,000. That means you've got 6,000 left. Well, the way to get it to be that you've used just 1,000. Now, when you negotiate your purchase agreement, you're going to ask the seller to pay up to $5,000 towards your closing costs. So as long as the program permits it, and to my knowledge, all of MHFA programs allow it, that's the second way that you're going to get your cash to close down to a very affordable $1,000. Now, a couple of notes here. Just last year, so in 2024, that $14,000 was $16,500. So it's down a bit this year, and they do change it from time to time, well, from year to year. But one thing that has stayed the same is it can be used for 2 units. So it can be used for a duplex if it's owner occupied. Now, the thing to understand there is that it's more than a minimum of $1,000. That program requires that you put in at least 3% of the purchase price. So if you find a duplex for $300,000, 3% of that is $9,000. The rest can be down payment assistance, seller paid closing costs, etc. So how does it work? It is a second mortgage on the property. So you're getting 2 loans. There's the main loan that is conventional FHA, VA, or USDA. And then there's a second mortgage. Now, because it's 0% interest, you can end up forgetting about it, but you don't want to, because when you go to sell the home, you owe the state of Minnesota $14,000. They lent it to you to get into the home. It's a second mortgage. You need to pay it off. The other places when you need to pay it off is if you refinance it and don't get a Minnesota Housing Finance Agency first mortgage. So if you refinance it to a whole different type of loan, you're going to need to pay it off at that point. And one thing to pay attention to is if you vacate the property and rent it out, now you owe it all in a lump sum. You owe $14,000. So this is not good if you are thinking in terms of, I'm going to buy this house, rent it out, go buy another one. doesn't work well for that because you're going to have to pay the $14,000 off in that scenario. So how do you qualify? You need to be a first-time home buyer. The definition of first-time home buyer in our programs is that if you haven't owned and occupied a property in the last 36 months, so in the last 3 years. So if you bought a house and sold it, 8 years ago, you're a first-time home buyer again. Secondly, you have to qualify for a first mortgage. So you need to be able to have decent enough credit, and your income and debt scenarios need to match up for any of the conventional programs and FHA and VA, et cetera. There's minimum scores, credit scores on those programs. There is maximum income limits. We're going to take a look at that here in a little bit. And there's maximum asset limits. If you have too much money, if you've got $500,000 sitting in the bank, you need to use that money. This deferred payment loan isn't designed for you because you don't qualify for it. Well, I want to just note that the 500, if you had enough money left over that is liquid. We'll look at those limits here in a little bit. Now let's talk about minimum credit score. So it varies based on the program, and there are some flexibilities within the same program depending on what score you've got. So all Minnesota Housing Finance Agency programs start out with a minimum credit score of 640. That's for conventional, VA, and USDA. It doesn't mean that if you've got 640, you automatically qualify. That's just one of the qualifiers, okay? And we need to be able to run it through our system, and it says that you're approved for it. But the first hurdle is to make sure that your credit score is 640 or higher. I want to note that the credit scores you find online are going to be different than the ones that we pull. And that's because you actually have over 50 different credit scores, just many different credit scoring systems. To my knowledge, you cannot find mortgage credit scores online, but we can. When we pull credit, it is a soft credit pull. So it actually has no impact on your credit score whatsoever. So 640 for all programs, or for conventional VA and USDA. Then for FHA, the minimum credit score is 650. And the program becomes more flexible at 660. And here's what I mean by that. At 650, they only allow you to borrow up to 45% of your gross income in terms of monthly payment plus any traditional debts that you have. And then at 660, they'll go up to 50% of your gross income. That's actually a huge difference, especially in today's market when payments are higher. So if you've got a credit score of 660 or higher, that's definitely to your advantage if you want to use FHA along with the Deferred Payment Loan program. Okay. There are maximum income limits to this program as well. So it's a needs-based program, which means that the state of Minnesota has a limited amount of funds. And so they're going to reserve this loan for buyers that truly need it. And they have to set some parameters. So one of the parameters they have set is maximum income limits. Now, if we take a look at this chart I've got on the screen, you'll see the maximum income limits it's a graph that shows the Twin Cities market, the Rochester market, and then all other counties. And the highest of those numbers is going to be in the Twin Cities. You'll see for one or two people in the household, that's $79,000. That's down from last year. So this is a new update on the Deferred Payment Loan program and their maximum income limits. And then when you've got 3 or 4 people in the household, you'll see it's $89,000 and on up. Now they count income from you and your spouse, if any. So even if we do a loan in just your name, if you are married, now I need to count your spouse's income in addition to yours to determine if you exceed the maximum income limits. When we're working with down payment assistance, we have two kinds of qualifiers. There's, can you repay the loan? We look at income in that way. And if your spouse is not on the loan, then, we're only going to count your income. But for compliance purposes, that is for the program purposes, they require that I count that other person's income. So if you earn $75,000 and your spouse earns $10,000, together you earn $85,000, you would not qualify for the program, even if we did the loan in just one of your names. But this is true only for spouses. So if you're not married and have other occupants in the home, we don't count those. We don't have to count their incomes in these maximum income limits. Now, there's a couple of new twists to the MHFA Deferred Payment Loan this year. One of them is that another qualifier is that the mortgage payment itself has to be at least 28% of your gross income. Now, most of the time, we're going to see that that's the case, but there are plenty of occasions when that doesn't happen. So we have to definitely pay attention to that this year. And here's what I mean by this is that if you earn $84,000, that is the same thing, for the year. That's the same thing as $7,000 a month. We need to take 28% of that, and that works out to $1,960. So that means the mortgage payment has to be at least $1,960 for you to qualify for this program. Again, it's needs based. So if the mortgage payment is only $1,700, I'm sorry, but you don't qualify for the program. But if it's based on the income limits that I'm telling you here. So that's maximum income. Maximum assets are involved too. So if you've got too much money left over, then you don't qualify for the program. When they look at money, they're talking about what is liquid, stocks, bonds, mutual funds, CDs, but not 401k. So if you've got $1.5 million in a 401k, but you only have $13,000 in the bank, now there's no problem. But if you have $100,000 in the bank, you're not going to qualify for the deferred payment loan. So the maximum assets are either $13,000 or 8 times whatever the monthly payment is. So if you have that much money left over after closing, then, you would not end up qualifying, for this program. So it's that if you're close, those are things that we can work on adjusting. This year they added another, or a benefit, and that is that we can work with your assets so that if you have a debt and you're close, they allow you to spend down your assets by $2,500. So if we're going to, if you've got a credit card that has $5,000 on it, we would need you to pay $2,500 against it to make sure that you've got not more than what the maximum asset level is for the program. So how do you get this money? Well, you need to get it through a lender. It's not through MHFA. So, you need to work with a lender who actually does MHFA, and not all lenders do. Just because it is a mortgage company or a credit union, or a bank for that matter, doesn't mean that they're signed up with MHFA, or that they do all of their programs. So we do, So when I've got a borrower that qualifies for this program, then we take care of reserving the funds, locking in all of the rates, locking in the program, et cetera, through the state. And then the state of Minnesota issues that money to us. And it has to be the same lender. So, if you are working with lender A and you want the deferred payment loan from lender B, that's not going to work. It's got to be all through the same lender. I'd love to be that lender for you, by the way, but if not, then ask your current lender about the MHFA Deferred Payment Loan. So that brings me to how to apply for this. Well, the easiest way is to apply online. I've put a link in the description below for for where my website is and how to apply online. I want you to know a couple of important things. One is when it pulls credit, it's doing a soft credit pull. It has no impact on your credit score whatsoever. So you should not be afraid of going through that application. The data just comes right directly to me. And I tell you that because I have people that, delay and wait on their application. They're looking up how much they have in their bank account, or they're waiting for a pay stub 2 weeks from now. Don't wait. Apply now. All of that stuff just comes to me and we're going to have a conversation about it. Okay. And, the credit pull is not going to impact you. It won't even show up as a credit inquiry on your credit report. So there's really just no harm or damage by applying right now. Also, in the description below, I'll put links to, the other couple of MHFA programs that are available. This one, is kind of the most accessible one that is really useful for a lot of buyers. And if you've got any questions at all, feel free to add them in the comments below. I'll be sure to get back to you, or feel free to reach out to me. My number is right here on the screen. You can text me or call me. I'd love to be able to answer those questions for you. I've done mortgages for a very long time, over 30 years, I would have to say. And working with MHFA and the Deferred Payment Assistance Loan, it's really just very satisfying to me. I would love to be able to help you on your home buying journey. Thanks for taking the time to be with me today.